Did you ever wonder if harmonic patterns actually work? Well, that is exactly what we will be speaking about in this video. I will be showing you when they work and when they don't work, and most importantly, I will be showing you how most people are actually trading them in an unprofitable way. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis daily on my platforms, so I suggest that you subscribe and I will see you in the video. Okay, so today I want to show you how harmonic patterns actually work, or better said, how harmonic patterns don't work. Now, you see me use W and M formations over and over again in my analysis. If you have been following me, you know that these patterns work, and they work very well if you're able to use a combination of multi-timeframe analysis, so not looking at only one time frame, but looking at multiple timeframes, understanding how the market works from a directional perspective, being able to implement in your analysis the COT data, so what hedge funds are doing in the market, and most importantly, waiting for the proper confirmations from a 4-hour perspective when it comes to executing the trade. So all of this works extremely well, and you see me apply this in the market over and over and over again. For example, here on USD Ruble, when I told all of you expect the market to make this move to the upside, we can be looking for a potential capitalizing opportunity for the move to the upside. Or when I said on Euro USD expect the market to complete the W formation to the downside, I will link both those videos in description. So you see me use W and formations, and at the same time I'm here telling to all of you that harmonic patterns don't work. But there is a big difference between the two. Now, yes, they're very similar. Okay, W&M formations, the way in which I call W&M formations simply W&M formations, and not give them all the names that people like to give them, like Gartley, Shark, Butterfly, all these made up names. It's nonsense. Okay, what they're doing is nonsense, and the reason for which is nonsense is because if you Google on internet, for example, the Gartley pattern, that the most popular one, okay, you just Google it, you will clearly see that you have all the rules outlined. Okay, and if all the world is able to know which strategy you're applying, exactly your rules, obviously the pattern will never work. And the reason for which it will never work is because it will be hunted each and every time by big banks and institutions. They will not give you a long-term edge in the market. Sometimes they will make you win so that you continue to trade it, but in the long term there is no way you will have an edge if you're trading it in this way. But not only for the reason that everybody knows your rules. The reason for which it doesn't work is because you don't have a great risk to reward. In fact, the way in which most people trade these patterns, now I'm not even sure if this is considered a valid Gartley, but I won't even try to measure all the measurements that have to be done to consider it valid. But the way in which I know that most people trade it is just with a buy limit. At the completion zone, they just place a buy limit. The stop loss most of the times is below the start of the pattern, and take profit, I think most of the times at the 0.618 of the Fibonacci taken on the impulse to the downside. So having the order there, okay, a buy limit in this case or sell limit, so they don't wait for any kind of confirmation from a 4-hour perspective. So when the market actually hits their buy limit, the market could be showing any sign of bullishness and just be melting to the downside completely, and they would be entering the market anyway with their pending order. So they would be in a completely bearish market without any kind of confirmation, and they're still in. So it's complete nonsense. Plus most of them, they don't even look for further confirmations. Okay, they just execute the trades at market only based on the pattern. They don't look at what they have, for example, on the weekly time frame, on the monthly time frame. If they see a daily Gartley, they just execute, they just place their pending order. And most of these people, they just Googled the rules. Okay, they didn't even do the testing. At least if you want to trade these patterns, which by the way I don't suggest you to do, if you want to trade them in this way, then at least do the testing before trading them, and you will see that you will not be trading them because in the long term, they do not give you an edge in the market. Now, to show you how you can be implementing a multi-time frame analysis by using properly these harmonic patterns that do complete many times. So they are a very powerful asset that you can have in your trading if you use them correctly. I will be performing a multi-time frame analysis and showing you how we executed the trade with students here on USD Rumble. But it will be very complete because I will show you what we had on higher time frames, what we had from a COT perspective, so what hedge funds were doing at the time in the market, and how we found proper confirmations from a 4-hour perspective to actually execute this position. We just then didn't say, okay, M formation, let's just buy at market, or any name that you want to give it to it. I mean, I call it M and W formations, and if the market continues, I call it overextended M formation, while they will just buy here, okay, it's a failed Gartley. No, there is a great opportunity to be capitalizing on the move to the upside. For example, on Euro CHF, if you remember, we just capitalized this week on a nice move to the upside because we had an overextended M formation from a weekly perspective. So learn to, if you just read something on the internet, on Google, don't trade it, okay? At least test it. First, you test it. Then if it works, then you can move to a demo account, live test it for 6 months. If it still works, then move to live trading it. And at that point, yes, it's proven profitable. But until then, don't just trade a strategy that you can find on Google, okay? Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, how we were able to capitalize on this move on USD Rumble with students? Now, first of all, from a weekly perspective, what did we have at the time? Now, at the time, we had clearly a situation in which the market had provided a nice impulse to the upside, followed by nice retracement. If in the market you see an impulse and a retracement, you want to see the market at least try to make another impulse to the upside and try to complete the pattern. Doesn't mean that the market will actually manage to create a higher high, but at least the market will try to start another move to the upside. What you have to also do if you want to measure this retracement is taking your Fibonacci from the low to the high of the impulse. And in this case, what we could clearly see was that the market had already rejected the 50% retracement of the Fibonacci taken on the impulse. Going down on the daily time frame, what did we have? From a daily perspective, we had a market that clearly had created this M formation. So more confirmation for the move to the upside, not just longing at market because we have an M formation. We had an M formation here on the daily. Therefore, we wanted to be looking for possible buying opportunities with a completion zone at the neckline. Why the neckline? Because it's a target that makes a lot of sense from a structure perspective, because it's the previous support which is turned resistance. So you want to see the market reject the area. Therefore, if you will be in a long position, you want to take your profits at this area. From a COT perspective, so what hedge funds were doing at the time in the market, we were seeing a clear increase in the net positions. We had reached a low here with 7K net positions. So basically having, from an institutional perspective, 19K longs and 12K shorts on the US dollar. And we had a clear increase all the way up to 15K net positions. So a clear increase of the longs in comparison to the shorts from an institutional perspective on the US dollar. So we could definitely expect US dollar strength. So more confirmation for the possible completion of the pattern. At that point, and only when we had all our confluences in place, then we went on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. Now, when it comes to one of our valid entries, here, obviously, I can't share the rules, okay? I can't share my rules for entry. That is part of the mentorship program. But what I can share is a very basic technical analysis concept. We had a left shoulder here, head, right shoulder, meaning that we had structure at this level after this fake breakout to the downside. Stop loss was below the low, take profit at the neckline as we had already identified, giving us a nice 1 to 3 risk to reward. I can't share all my rules for entry. No, you can't use only structure. You will never be profitable if you only use structure as confirmation for your strategy. But it is a very basic technical analysis concept that you need to know. And I know that many people are just charging thousands of dollars to teach basic technical analysis that you're supposed to be learning for free, okay? Don't pay somebody just to teach you basic technical analysis, because it makes no sense. Because you can learn it completely for free on this channel or on Google, literally. So this is what we had on USD Rebel. So a complete analysis leading to the completion of this information, not just executing trades with pending orders. I mean, it was a pending order, but only after all the confirmations from a 4-hour perspective as well, and multi-timeframe analysis. But don't just trade harmonic patterns blindly, because as you will see, also if you try to test it, it will not work. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. The link is in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. The link is in the description, and I will see you in.